Good morning, my YouTube family. I hope you guys had a good weekend, and I hope everybody's being safe, man. A lot of crazy shit going on in the world right now, guys. A lot of anger going around, rightfully so. I just hope everybody's being nice and safe. I really do. So, hopefully everybody had a good weekend. Hopefully everybody's in a good headspace, and you guys are ready to kick some serious ass this week. Let's jump in here. Take a look at ES this morning, guys, and like I mentioned in last night's video, the futures are doing what the futures do. We gap down 1%, we're bouncing, we're banging, we're whirling, we're twirling. We're pretty much flat heading into the open. So no big changes here, guys, in the index heading into today's session. And, we look at the SPY from last week. If you guys been paying attention, we've got the daily squeeze here on the SPY slowly, pathetically breaking towards the upside. So, guys, this is not the daily squeeze America needs right now. We need a big whopping breakout. So we've been waiting for this move, and technically, yes, the squeeze is firing, but it's firing on below average volume, and it's firing, guys, while we saw signs of rotation last week. So if I had to grade this daily squeeze breakout on a scale of 1 to 10, I'd give it a big, that's my kind of opinion. So we'll see if the market can get anything going to the upside today. And my thought process is, guys, we're trying to break out here. Volume is starting to, look a little bit lame. Unless we start really getting cooking, what would make a lot of sense, guys, is a pull back to the 21 EMA, right? Nothing wrong with that. That's completely normal, completely healthy. It's your reversion to the mean. You begin a trend, reversion to the mean. You make the next leg, reversion to the mean. You make another leg, R to the M. You make another leg. So don't be surprised, guys. That would be a normal, healthy move for the market. That could set up better opportunities to get long. So don't be the dude where the market starts fading, you're freaking losing your mind, jumping on everything short. Reversion to the mean. Could be as simple as that. So for my open positions, guys, Tesla is looking like she's going to be nice to us here today. So Tesla is my favorite setup right now. And forget the stock, guys. You've got a daily squeeze. Let's go down to the 4-hour chart, and whoa, we got a 4-hour squeeze that is fired to the upside. Let's go to the hourly chart. Woo, we got an hourly chart that's squeezed and fired to the upside. So building up energy on the hourly charts, energy gets released. Building up energy on the 4-hour charts, energy gets released. Let's see, guys, if we can release enough energy this week to see this daily squeeze break to the upside. So I got a couple $1,000 coming my way if Tesla wants to behave, guys, between 3 different put spread positions. We got 2 for this Friday's expiration. We got a swing all the way out here for July. And we'll see how it goes, guys. So if max profit, say, is $2,000, I'm looking for 70 to 80% of that max profit. If I can get to that level, I'm taking the risk off the table, I'm locking those gains, and I'm moving on to the next opportunity. So simple stuff there, guys. And to continue the conversation of simple stuff, got a few good looking setups here. So we were just talking about reversion to the mean, and that's what we saw a lot of last week. A lot of names that have been looking pretty good made that classic healthy pullback to the 21 EMA. And very briefly, guys, let's go through the entire list here. Nvidia, reversion to the mean, down to the 21 EMA. Shop, there you have it. Jesus, man, who else was there? Was Amazon? There you have it. So on and so on and so on. Reversion to the mean. So, Beyond Meat, guys, looking like a really good daily chart right now, right? You make a nice move, you get your reversion to the mean, the move continues. You get your reversion to the mean, does the move continue? It's exactly what we're looking for here, guys. So my thought process is to make this trade nice and simple, and to make this a trade that I ain't going to have to sit here and babysit. I'm looking to short puts underneath 120, right? Short and puts underneath support, underneath the 21 EMA. And again, guys, the thought process here is that we've made a reversion to the mean. Now we're looking for the trend continuation. So I'm not going to rush into this, right? When it comes to swing trades, when it comes to put spreads, you want an ideal entry, guys. At the moment, this thing's gapping up about $3 to $4. If at any point today we can get a nice little dip, we can get a pullback, what I'm looking for, guys, is, give myself plenty of time, call it June expiration, July, you can go with the July 17th, and I'm looking to short puts underneath 120. Now, this thing gapping up this morning doesn't do me any favors, right? The puts are going to lose value, and I'm looking to short those puts because I want to collect premium. So if we can get a little bit of a dip here today, guys, what I'm going to do is go to this options chain, and I'm going to see how much premium we got on these puts, and how does a risk reward look? Say, shorting the 120 put and buying the 115. And at the moment, guys, it's $1.86 a credit. You're risking $3,000 to make $2,000. For those of you with a smaller account, you're risking $300 to make damn near $200. So this is really sweet, guys. Now keep in mind, we're going to gap up about 3 points as of right now. On a 3-point gap to the upside, what's going to happen to these puts? The calls will gain value. These puts will lose value. So even though on Friday's close, those 120s had about $10 of premium, with this gap to the upside this morning, they're going to lose some of that. And the reason that's important, guys, is understanding that the risk reward that we're seeing right now, it ain't going to be the risk reward we see this morning. These 120 puts are going to lose premium. You're not going to get as good of a deal. So that's why, to me, guys, it's all about patience. There's plenty of other setups. I'll get my shots this week. If Beyond Meat can dip enough to bring back some of that put premium to those 120s, I'm coming in and I'm looking for a put credit spread. We'll see, guys. And as far as, how these trades have been working in this environment, they've been working awesome, right? Collecting premium, guys, has been really, really good over the last couple of weeks. Last week we get a big gap up in Facebook. We're shorting 247.5 calls, collecting a nice profit the very next day. Amazon, we're shorting calls. It makes the reversion to the mean. You're collecting some beautiful premium. Goldman Sachs, big move here. We're shorting puts before the close. Gap up the next morning. You're collecting that premium. Look at a chart, guys, as unexciting as gold. Been going freaking sideways for weeks now, but I'm making money every week because I've been short those 157 puts. And I'm collecting premium, collecting premium, collecting premium. So that's that, guys. Nice and simple. I'm not looking to come into this week, overly aggressive, especially considering Tesla's looking pretty damn good here. I don't want to force the issue. So I hope you guys enjoyed the video. If you haven't already, please go ahead and subscribe. That does mean a lot to me. And you can check us out at focustrades.com. We get some free videos on here, guys, a couple of free lessons. And you can also check out our summer swing trading course if you're interested in learning how to trade the strategies that I personally use as a full-time trader. So it is 7 o'clock, guys. The market opens in 2.5 hours. The suspense is building. I'll talk to you guys later on. Much love. Peace out.